So let's finish up with some common beginner mistakes, especially when we're dealing with liquidity. If you're a beginner, these are some things I want you to be really careful about. Number one, as we talked about before, putting your stop exactly at the most obvious major swing point. That's what somebody told me on YouTube to do. That's what they told me. It's got to be safe there because it's a swing high, swing low. No, it doesn't. We just saw a couple of really good examples of why we would not want to put our stop right next to that major swing low or swing high. Number two, treating every break of a high or low as a breakout and buying immediately into that stop run. If you were expecting price to push right through that high and low that we just saw in TradingView, both of them would have been wrecked, right? It would have immediately been wrecked. Be very careful with breakouts. If price breaks above and then price closes, there's your key, right? Look for the close. If you're a breakout trader, look for the close. If you're a reversal trader, look for the close, okay? Really, really important. And finally, number three, ignoring the high time frame liquidity. Be really careful. You don't want to get tunnel vision by sticking on the 1 minute chart all the time. And I've talked about this in past episodes. Being careful as a new trader, you may not even want to touch the 1 minute. Maybe we want to stick to the 5 minute and up instead before we can get comfortable with some of these, because there's a lot of fake outs. A lot of fake outs on the 1 minute that can confuse you. But do not get tunnel vision on your lower time frame chart while the higher time frame is doing something really important. If the 60, the 4 hour, the daily is sweeping major liquidity, you need to know about it. It's easy to get lost in the trees, lost in the muck of the 1 minute or 2 minute or 5 minute charts, right? Be well aware of what's happening on the higher time frame. And finally, remember, we must know what is happening on these higher time frame charts as we trade. Don't get trapped, right? Be the hunter, not the hunted. And be really, really careful with understanding where liquidity lies so that you will not be someone else's liquidity, but you can actually take advantage of where those locations are to get some of the best and most impressive risk to reward ratio returns on all of your trades.